What's up everyone, my name's Robbie, this is Robbie and Manila, and today we're talking about Betterment. So the very first video I made on my channel was actually a Betterment versus Wealthfront review. I made it about a year ago, and to this day it's one of my best performing videos. Because it was a comparison video, I didn't go as in-depth into each platform as I would have liked to. So in this video, we're actually going to go more in-depth into Betterment so we can kind of understand it better. Because there are some interesting features that I'd like to explain a little bit more. So for example, one of those is called the Goldman Sachs Smart Beta. The other is called tax location. So those are two just kind of more complicated things about Betterment that we're going to go over, but really we're going to go over an entire review about the company. And so let's go ahead, let's just run this intro and let's get started. Okay everyone, let's go ahead and get started by jumping into the computer. So let's go over some basics about Betterment first. So the first thing to know is that Betterment is a goal-based robo-advisor. And so what that means is you have the ability to add different goals to your Betterment account, and essentially Betterment's going to help create a plan that's going to link a bunch of different things together. For example, you could have a retirement goal, you could have a home goal, your building wealth goal, vacation goals. So it's essentially going to create more of a financial plan for you than just you going ahead and creating different accounts and different investments in those accounts. It's going to link everything together, do its best to create more of a financial plan for all of your money combined. And so this kind of way of thinking is a robo-advisor, but it's also a little bit more than just a robo-advisor. A robo-advisor might just be something that manages kind of asset allocation, how much stocks, which types of stocks and allocations you should have, whether you should have how much in international stocks, how much in domestic stocks. This is all more about asset allocation that a robo-advisor can go ahead and structure for you. However, Betterment also has this goal-based type of financial planning. So it's a robo-advisor in the sense that it does have asset allocation, how much you should have in stocks and bonds and everything like that. But then there's that other part of Betterment that allows you to have this goal-based area. So the next important part, of course, is the fees, and the Betterment fees aren't too bad. So you're going to pay a fee of 0.25% on your money if you don't have a financial advisor. Now, that is something interesting about Betterment. They allow you to have the option of having a financial advisor. So if you want a financial advisor, access to a certified financial planner, it's going to be an extra little bit. So extra 0.15% to bring it up to a total of 0.40%. Now this asterisk here is actually going to show you that this does not include the fees on the ETFs. And the fees on the ETFs are going to be around 0.0% up to about 0.15%. If that's confusing, just think of it like you probably wouldn't go higher than about 0.40% with a non-financial advisor account. If you have the financial advisor account, it might go up to about 0.55%. So that's what we're talking here. The next thing that's great about Betterment is there's actually no account minimum, so you don't have to worry about how much you can add to the account. You can start with as much as $0. Of course, I think you're going to want to have more than that, but it's a great that you can kind of test this out if you just want to put like $1,000 in, see how it works, then add more later on if you want to. So that's a great feature. There's of course automatic rebalancing, which is an important part about any robo-advisor. So what's that mean? It means that if you, or for example, you want to have an allocation of 50% stocks, 50% bonds, and the market does really well, and let's say your stocks outperform bonds because they should, and suddenly now you have 65% in stocks because the stocks is better than the bonds. Well, if you're going to keep a 50-50 portfolio, Betterment's going to actually rebalance your portfolio and keep it at a 50-50 portfolio. Next is that Betterment does allow fractional shares, so if you won't have very much cash at all if you don't want it inside this portfolio. If you want to have like 100% of your money invested at all times, you're going to have a better chance with Betterment by getting that because they do allow fractional shares. So another feature that's great about Betterment is they have tax loss harvesting available. So what does that mean? Well, let's say you have a part of your portfolio, some different funds that have actually lost value. Well, Betterment can sell those funds to kind of lock in some tax savings for you, so it can actually allow you to have less of a taxable account going forward for the year. So it's kind of just more efficient for tax purposes, And so Betterment's algorithmic investing has the ability to kind of do that for you, so you don't have to do it yourself. As for the types of accounts that Betterment offers, so there are all the really important accounts. They have a taxable brokerage account. If you have an IRA, of course, that's something that you want to be able to add to your Betterment account. If you have a Roth IRA, the same. A SEP IRA, a joint account, so if you want to have an account with a spouse. A trust account, if you have a trust, or if you're going to set up trust, something like that. Trust accounts can be integrated into this. There's also checking available, so Betterment does offer a checking account with a debit card and things like that. We'll go over that in a second. And the one thing that they do not have here is the 529 plan. So that's actually kind of a big deal for some people. If you're looking for a financial plan that integrates a 529 plan, so college savings for a child, then Betterment's not going to have that one little piece for you for your life goals. And so when it comes to creating a portfolio of these different ETFs, it's going to be goal-based. And so to get to all these different ETFs and the correct allocation of the different ETFs, it's going to be based on a profile that Betterment's going to have done on you. And so now you might be asking, how does Betterment figure out which of these ETFs is going to be best for you? It's actually interesting because it's unique to you. It's going to be based on a profile. So to create a profile with Betterment that's going to be unique to you, that's going to allow them to algorithmically invest your money, they're going to ask you a series of questions, and they're going to also take into consideration things like your age, for example. An example would be, would you be more comfortable with the market gaining 10% if you could potentially lose 15%? Or would you rather like to have the market potentially gain 50% with the potential of you losing 60%? I'm just making this up, but those are just examples of types of questions that these profiles ask you. So after they create your profile as well as your age, they're gonna figure out basically how you specifically should be investing and your asset allocation. And these different allocations can actually work between the different life goals that you're gonna create. So for example, if you have a kitchen renovation or a Reach College Fund or a dream retirement, so they're gonna have different potential allocations based on the thing that you're gonna be saving for, as well as what your risk tolerance questionnaire came back as. And so to figure all of this stuff out, it is best that you're gonna be able to link all of your different accounts so Betterment has access to seeing how much money you have in basically everywhere, and they can kind of link everything together and structure it correctly. So as long as you do that, you can get to the point where you have like a more of a goal-based account with Betterment. And so here's an example of what a goal-based investing might look like, also depending upon your risk tolerance. So for example, the most aggressive allocation here on the left shows in retirement it would be 90% stocks and 10% bonds. But if you were in retirement trying to generate income, it would be different. It'd be 56% stocks, 44% bonds. If you're saving just a safety net for yourself, it could be 30% stocks, 70% bonds. General investing would just be 90-10. And then over here, major purchases. So any money that you're going to be saving for education, for a house, for other goals, they would also have 90% stocks, 10% bonds. So this is all for someone who's the most aggressive. But look at what happens if you're the most conservative. So if you're the most conservative, Betterment is going to change the way they invest your money. So what they're going to have for retirement, it would be 56% stocks, 44% bonds. For retirement income, 30% stocks, 70% bonds, and you can see all the way down to major purchases for a home and things like that would be 100% bonds. So really Betterment's goal is to create this financial plan for you, manage specific goal-based accounts correctly based on how aggressive or conservative you invest. So some of the special features that Betterment does offer that actually a lot of other of the robo-advisors don't offer are access to a financial advisor as one of those things. And essentially you can have a team of CFPs that you can call and ask questions and get answers on. The next thing we have is socially responsible investing, which a lot of people really feel that they want in their portfolio these days. Betterment does do a good job with this, and it does better than, I will say, Wealthfront. So let's really quick, I'll show you about what this looks like. So you can actually choose your impact with Betterment. And so what that means is you could say broad impact, which is a low-fee, globally diversified portfolio designed to help you reach your goals with investing in ETFs that meet environmental, social, and governance, or also known as ESG requirements. There's also climate impact, and this option You can invest in ETFs that support companies with lower carbon emissions and the funding of green projects. It also features ETFs that divest from holders of fossil fuel reserves. So if you don't want to invest in anything that involves fossil fuels and things like that, you have a portfolio that invests in that. You also have social impact, and this offer is based on broad impact and adds 2 funds that support minority empowerment and gender diversity. And Impact shares NAACP Minority Empowerment ETF and State Street's Gender Diversity ETF. So you do have some definite options. They are definitely better than a lot of other robo-advisors in terms of social responsible investment. Next, which I find very important for most people, are going to be the different strategies for taxation and for investing. The first thing, of course, is tax loss harvesting. So let's give a little brief overview about how this works. You can see here US large cap value stocks. So for any amount of your portfolio Betterment wants to put into this type of style, they have 2 different ETFs. They have a VTV and SCHV. So what they can do is they can use VTV as primary, but let's say VTV actually loses some value. They can actually sell VTV, they'll take in some losses, which they can help offset on your taxes, then they'll buy SCHV. And so they do this with all the different asset classes. And as you can imagine, it gets probably really complicated if you have, multiple different asset classes and they're trying to do tax loss harvesting in all these different ones. So it can get really hard to pull that off. That's why they have Betterment with this algorithmic type of investing and tax loss harvesting. Now there is another thing that even brings the taxable efficiency of Betterment to another level, and that is called asset location. And so here we can see it says that asset location works when you have more than one funded account that is taxed differently, such as taxable, traditional IRA, or Roth IRA. So essentially, if you have different taxable type of accounts, then this tax location strategy can work for you via Betterment. And then here you see it says, will generally place your least tax efficient assets in your tax advantaged accounts. So for example, if you have an IRA, they will put the money that's the least tax efficient in there. They'll divert the most tax efficient assets to your taxable account. So essentially, if this is kind of confusing to you, what it just does is it makes a more tax efficient way of investing. So at the end of the year, you should pay less money in taxes for your investments. So moving on from the taxation part, now we have some of the interesting investment strategies offered by Betterment. And one of those is called the Goldman Sachs Smart Beta strategy. And so to explain this, let's look at this chart from Betterment, and let's go back to the idea that Betterment and just investing in general passively has its benefits. So if you just put money into an index fund to try to do what the market does, you're not trying to beat the market because you're just trying to average what the market does. This is because a lot of fund managers don't end up outperforming the market. This strategy is something that can potentially help you try to beat the market. And so essentially this is not as much of a passive strategy, but a bit of an active strategy as well. So just take that into consideration so you understand this is going to try to do better than the market. And what they've done is they've said there are different factors that sometimes outperform the market and sometimes don't. Sometimes here you can see momentum does not outperform the market, but in other times it does outperform the market. And so these are the different strategies that they're breaking into, or actually considered factors. So for example, you have quality factor, you have value, you have low volatility, and those are the different 4 factors here. And then the S&P 500 is this gray box, and the weighting, equally weighting these different factors here are the equally weighted factors in the black box. And so what you're looking at is you're trying to see if the Goldman Sachs Smart Beta portfolio that Betterment is using is going to be outperforming the gray boxes. So anytime the black box says better than the gray box, it means that it's outperforming. And so here you can see it underperformed a bit, it outperformed, underperformed, outperformed. So generally, it does an okay job. Some years it's outperforming, some years it's not. Finally, the last investment strategy that we have here is called the Blackrock target income strategy. And so these target income strategies are really more for people who are going to be wanting income from their portfolios. So generally, a lot of people who are more probably retired are going to be benefiting from this. So for example, Core Income Tactical Update, it seeks to generate yield similar to Bloomberg's Barclays US Aggregate Bond Index with less risk. So essentially what this is doing is it's just trying to get you more income with less risk. And so I hope that kind of helps you understand some of these different strategies that Betterment does have an offer for you. So tax loss harvesting and asset allocation are going to be great for taxation purposes. Goldman Sachs Smart Beta is going to be really good, or potentially good, if you want to try to outperform the market. And then Blackrock Target Income can potentially help you generate more income when you're investing, and especially if you're in retirement, potentially this could be good for you. So that is all we have for this video. I hope you now have a better understanding about Betterment, if it's something that's going to be for you, and I hope that you understand, maybe if you were confused about some of these other things like the Blackrock Income Fund or the Goldman Sachs Smart Beta or tax location, stuff like that. I hope this really helped you figure those out. That's really my goal in this, so I hope you understand what those are now and if they will be beneficial to you. So I'm going to put a link in the description below for my Wealthfront versus Betterment video and the first video I ever made, as well as my future video that I haven't made yet, but when I'm done I'll link it in the description. It'll be my Wealthfront video, so take a look at that as well. And also, on the end screen that's coming up, there is a video or a few videos, so why don't you watch one of those? I would appreciate it. So thanks again, and see you next time.